Hey guys, what's up? My name is Aayush Khanna and you are watching our channel Aayush Khanna classes. Now, this video is again for CA IPCC old course, paper number 1 accounting partnership. Now, only last two to three topics are left, so we are gonna complete that. Okay, now let's start. First topic is joint life policy. Sometimes what happens in some partner dies, so the partnership firm in advance takes a joint life policy so that at the time of any death of the partner, he is remunerated with the amount of with the share of his joint life policy. Okay, now what would be the journal entries in this case? See, when the premium is paid, in case of premium, if the premium is paid as an expense, if the premium is paid as an expense, then what would be the journal entries? Just guess what would be the journal entries on the payment of premium. On the payment of premium, it would be joint life policy insurance premium account debited to bank account. Okay, being the premium paid, I hope this basic journal entry everyone would know. Second, uh, the insurance premium, payment of insurance premium have to be charged to profit and loss account. What would be the journal entry in that case? Profit and loss account debited to joint life premium insurance, joint life policy insurance premium account. Okay, first we have to pay it, then we have to transfer it to a bank account, sorry, to profit and loss account. Then on the maturity of policy, what would be the entry? If the payment is received, if the cash is received, in that case bank account, or else if it would be insurance company, you can write anything in the exam. Account debited to whom the payment is done, to partners capital account, partners capital account, including the account of the representative of a deceased person, including the account balances of the deceased person. Okay, second case, when premium is paid as an asset, when premium is paid as an asset, in that case insurance premium is first debited to profit and loss account. Sorry, the insurance premium paid is first debited to life policy account and credited to bank account. Okay, same entry, first two entry same. Okay. Then at the end of the year, amount in excess of the surrender value, amount in the excess of surrender value is treated as a loss and is transferred to profit and loss account. Surrender value in excess of surrender value. In case of surrender value, it is treated as in excess of surrender value. It is treated as a loss. Okay, and is thus transferred to profit and loss account. Uh, loss and it is transferred to profit and loss account. And at the time of receipt, it is transferred to capital accounts of the partners. In on the receipt will be transferred to capital accounts of partners. Okay, now next, I think you got the topic. There's nothing much to explain. Third, creation of joint policy reserve account. First two entries same. Then at the end of the year, amount equal to the premium. Amount equal to the premium is transferred to profit and loss appropriation account. So amount equal to the premium would be a policy, it would be transferred to policy reserve account from where? From profit and loss appropriation account. From where? Profit and loss appropriation account to policy reserve account. Okay. Then nothing else in this topic. There's nothing else much. You can see its example on page 14.35, sorry, 14.33, 14.34 and 14.35, I suppose. 4.35, 14.35. Okay, you can see page number 14.34, 5, 6 till 6. You can see its example. Okay, now next topic. Next topic is what? Special transactions in case of death. Firstly, I'm going to explain you what right of an outgoing partner. Sorry, right of an outgoing partner. Okay, now section 37 of the Indian Partnership Act 1932 says 1932 says where any member of a firm has died and the remaining partner continues the business of the firm with the property of the firm without any settlement of the accounts as between them and the outgoing partner or his estate, Then, in the absence of a contract to the contrary, the outgoing partner is entitled, at the option of himself or his representative, to such share of the profits made since he ceased to be a partner as may be attributable to the use of his share of the property of the firm at the rate of 6% or as may be decided. From where you can get these words, these are on page number 14.46 under 11th heading. It says that any partner who is dead or is retiring from the firm, who is dead or is retiring from the firm, and the remaining partners are carrying on their business, then in that case the outgoing partner shall have a right to claim his share of profits. Now, how the share of profits should be calculated? Let's say of ABC are in partnership. Okay, they are sharing profit and losses equally. C retires on 31st October 2018. Okay, and the capital of the partners after all the adjustments are 50,000, 75,000, and 1,20,000. Okay, A and B are carrying on the business without settling the account of C. Okay, and the final payment which was due to him to C as on as at the end of the year or is after all capital adjustments is rupees 28,000. Then in this case, section 37 of the Indian Partnership Act would apply. Sorry, the final payment, it is the profit, not the final payment, it is the profit. Then how much would be his share of profits? It would be higher of the below, higher of the below. What? C's share 28,000 rupees profit is 1,20,000. His capital and total 50,000, and total capital of all the partners, that is 50 plus 75 plus 120, it comes out to be 2,45,000. It comes out to be some 13,714 rupees approximate, or he would get rupees 1,20,000 into 6% for how many months? For how many months? For 3 months. How 3 months? He is retiring on he is retiring in October, and his payment and his share of profits is received in February. On 31st October he is retiring, that is November, December, January, 3 months profit he would get, or his balance. It would be 1,20,000 into 6% into 3 by 12, that is 1,800 rupees. Then he would get this much amount, 13,714. Okay, how this 2,45,000 came? It came as follows: 75,000 plus 50,000 plus 1,20,000. all the profit, all the capital accounts of all the partners. Okay, you would get. There's only one question in the study material. Start solving it. I think you are getting up the points. Now, last thing is if there is any special transaction in case of death, that is JLP and a separate life policy. This is the heading number 10 of the study material. Special transaction. Special transaction in case of death. Sometimes there is in the balance sheet the surrender value. The surrender value of JLP is appearing. Okay, then the firm will gain on the death of any partner, as you might know. Okay, now what would be the journal entries in that case? On maturity, bank to JLP, how much amount? Balance sheet amount. Okay, then JLP to partners capital account. Now what will be the balance in this? It would be this is the amount on which the firm took, and this would be the amount the JLP have been purchased minus surrender value. The JS at the rate at which the JLP have been purchased minus the surrender value. Okay, let's take up with a small example. ABC are in partnership firm, sharing profits equally. Okay, 1:1. They took a JLP of rupees, let's say rupees 2,50,000. Okay, 2,50,000. And at the balance sheet, here I've written wrong, so please ignore it. At which they have took, that is the purchase value, and the surrender value appearing in the balance sheet, it's let's say 50,000. Then in this case, entries would be bank to JLP 2.5 lakh. This is 50,000. Then JLP to A to B to C. It will be rupees 2 lakhs, and it will be distributed in the same ratio, that is I suppose 66,667 and 66,666. 66,666. Okay, but what if there is no JLP in balance sheet? Then what would be the entry? The first entry remains the same. There would be a change in the second entry. Only the amount would be changed. JLP to A to B to C. It will come 2.5 lakh and will distribute among these all. Okay, this is the difference. If it is paying the balance sheet, then the difference amount would be adjusted here. But if no surrender value is appearing in the balance sheet, then no adjustment, no subtraction would be made. Okay, our chapter and topic both are finished. If you want more lectures of accounts of old course or new course, you may comment under this. Otherwise, I'll be non-stop putting up the lectures of taxation. Okay, so bye bye. Take care. How? Oh yes, do subscribe and share my channel if you want more free lectures. Thank you.